Good evening, ladies and gentlemen. This is Cruise Trading Frank. It's approximately 8:13 p.m. on March 4th, 2019. This is a Cruise Trading Strategic webinar that we publish 2 or 3 times a week. This is the one for the Sunday webinar that's rescheduled for tonight. Couldn't make it last night. Full disclosure, this is purely for financial education, not for any solicitation or advice. Keep in mind that all these webinars, the free ones, are published, are uploaded to the Google YouTube channel, the Cruise Trading YouTube channel, and you can review it at any given time. Do pass the word around for anyone who has internet connection to go out there and listen to some of these webinars, which are extremely accurate and extremely helpful for anybody who is in looking to make some money in the U.S. financial markets. Whether they're traders or investors, it really doesn't matter because once you try to understand the realities of what happens in the market, you have a good sense of what you need to do. On that note, we shall begin. So let me start off by saying a couple of broad points. The markets have come a long way from the bottom. We can see that very clearly from the bottom that was established on December 24th, 2018, not too long ago. And this is where we are right now. We had forecasted to a high degree of accuracy that we would get up towards this first level of major pattern completion, i.e. the first rest stop. And that's exactly where we hit today, give or take a point or two. The number here on the S&P 500 is 2816.65. The number that we reached today was 2816.88. You cannot get any more accurate than what was forecasted. Okay, so I also had mentioned in my previous webinars that you all have attended that once you hit this level, which is a major resistance, you are going to get some back and fill. Means the market's going to pull back a little bit. It's going to try to retest the floor, and the first floor it's going to retest is 2763.59. And these numbers are extremely important for anybody who's trading anything. So they understand that nothing to fear about the markets. You just have to understand it. And once you understand it to a large degree, then your fear level or your emotional level is minimized, even though it doesn't always feel good every day when the markets pull back and you're in a position, it comes down. It really doesn't matter. That's the nature of the business. You have to deal with the volatility. You need to set up trades when markets pull back, as long as they're within a technical parameter or range that it hasn't broken. Once it breaks certain levels, the markets can free fall a couple of hundred more points. I did mention in my past webinars very clearly that once we got towards this level, that we would have a 200 to 300 point pullback. That's exactly what we got. That's exactly what we got today. And there's nothing new. There's nothing strange. There's nothing to be really scared about. It's just the way things work. All right? Real simple. Resistance and support. And traders who don't understand the power of resistance and support, well, they need to basically refresh their basic knowledge on their own. So saying all that, the low for today on the S&P 500 was 2767.66. So we were 4 points away from the first major support level, which was right here that I had drawn and shown you guys since last week. Right there. Okay? So, bottom line is, and I'm going to try to keep this as simple as possible, we have had multiple pullbacks along the way. Every single red candle is a pullback of 100, 200 points. There you go. They normally last anywhere from 1 to 3 days. Anything beyond 3 days or 4 days, and just keep this in the back of your head, means that the market is weakened, is going to fall further. If it stays within a 24 to 72 hour range on a consolidation pullback within the levels that I posted, then the markets are okay. And if they last more than 4 days, then in that case, you are going to see a further pullback. That means there is some real underlying weakness that's coming in. So we are basically on the first day, to be honest with you, today. And it was on top of that, from a candlestick standpoint, this is known as a hammer reversal. Even though the body of the candle is red, this is the tail. All you people can see the screen, right? We have great members, Drew House, who just joined us. You all can see the screen and what I'm explaining? Yes?
Yes.
Okay,
Yes.
sounds good. So this is a hammer reversal. You see the tail. That tail was good for about 200 points on the Dow. We're going to go through the chart, which I've already produced on the real-time Twitter feed, and that's the reversal that you got. Very sharp one, systematic. These are all machine-driven. They happen very quickly. They are not controlled by humans, and that's the reason why you get 400-point drops and quick 200-point pull-ups, which within an hour or two. And that's exactly what we got today. So saying all that, this is a hammer reversal. That tail is good for 200 some points that we recovered in the market. And as you can clearly see here, we have had all these green candles are up days in between being down during the day. If a candle is green, I'm explaining in very simple terms, that means it's ended the day on a positive note. Then you had a 2-day pullback here. This is going back to the beginning of February. Pull downs. Another red candle, pull up. We hit exactly my level that I posted from way back. This wall here, you can all can see that going back to October of last year, this has acted as a major resistance. In my opinion, I believe we're going to break out of that resistance. The real wall in the market, or the real resistance in the market, comes here at this level. I believe we get that in the month of March. So you're talking about another 600 points or so on the market that we still have. And once it hits that, the market will have a pretty sharp drop. Now, the catalyst behind this could very possibly will be on the 3rd week of March, going into the 4th week, where President Trump meets President Xi of China at Mar-a-Lago, at the Trump Resort in Mar-a-Lago, and they signed the deal, the framework of the China-U.S. trade deal. So that would basically give the market that push to do that. In the meantime, the markets will be volatile. The markets are volatile every day. There's nothing new about that. And in between the volatility, some stocks are going north, and the stocks which track the markets obviously pull back on the days that we are red. Absolutely nothing new on that. So saying all that, this is what we did today. Now, if we break 2763, that red line here, that's the support, that's the floor, then that will push the market further down. And that next level, as you can see from this chart very clearly, the next level of support comes in on this red line here, and that red line is at 2717. So 2717 from where we are right now means about 70 points. From here where we closed at today, if we hit that next support level, this bar will expand blood red and then create another bar. You want to reduce, as a trader, you want to reduce your long exposure. That means you need to get out of some positions as you need to. Some swing positions are not that affected, so it really doesn't matter. But general positions like the Googles, the Amazon, that we made some very nice money on, Apple, even Facebook. So those, what do you call, and Netflix even in the morning, sold when it bumped up. So those type of positions, you obviously want to reduce your positions or get out of it. Take your whatever loss you have, you need to get out of it if we break these support levels, because that'll drag the overall market lower. Now, I'm explaining these in very simplistic terms because really trading is not complicated rocket science. It's not SpaceX putting, docking with the space station up there in orbit and the moon, and putting, and delivering an astronaut there. That's rocket science. That's what the really smart guys do. All right. We're dumb guys, And what we do is we try to read the message of the market real fast, and all of you can do that, okay? That's the reason why we call ourselves Clueless 8. All right? We're Clueless 8. How about that? So as long as you remain clueless, but smart in understanding the market, we're fine. That's it. So saying all that, the drop, if we drop here from the 27.90 level down to the next support level here, as I've drawn, which is around 27.19 to 27.26, you're talking about a good solid 70 points or so. That's a roughly 500 points on the Dow. Okay, 500 points in the Dow. They're all going to scream and shout and say the world has ended. The all type of garbage that you hear from the media. The media is designed to satisfy your hidden fears. Always remember that. You know, my dad always used to say, misery loves company, right? That old saying. It's true. Pessimism and misery, oh my God, my life sucks. You know, I can't do anything good, blah, 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 is always generates more conversations at a bar with another sucker who's sitting there telling his sob story of his life, okay, than somebody talking about their successes and how they overcome adversity and how they basically fought and fought every obstacle that came along the way. The same thing in trading, believe me. Okay, so misery loves company. Misery, they love to talk about the misery on the media all the time. And when markets are going up, you know what's the favorite thing that they say when markets are moving higher? As the markets moved higher all the way from December 24th, in between some pretty sharp drops along the way, you never heard them being at all enthusiastic, did you? I don't think so. Perfect. We don't want the media to be enthusiastic. You know, so and whether any financial media, whether it's Fox Financial Network, whether it's CNBC, whether it's Bloomberg. Bloomberg's a little bit smarter than the rest of them, but they're all the same. They're all the same, you know. And the publications are the same. The news media is the same, and that's just the way it is, you know. So it just feeds into your anxieties and your stuff, and you guys get really like bent out of shape. And some of you don't, but I'm sure a lot of you do. But that my job is to basically show it in very technical terms and visual terms what is exactly going on. So if you just look at this picture here, the net on a technical basis, it was actually a positive finish. Why? Because it stayed within this range. So this is a high level bull flag right there, the shaded area right there. There you go. This also is a bull flag, believe it or not. So even if we fall 400 points, you do need to reduce your exposure. You do need to buy those SPY puts. I really didn't feel like that's just my choice to really push out the SPY puts today, which I should have, looking back in hindsight. But I rather set up some nice day trades and swing trades from the bottom up, which paid very nicely. Google calls went from 5 to one of them. Well, it's on my Twitter feed. The 1160 calls we bought them around 5 and change. They went to almost $11. They ended the day at around 8, between 8 and 9. Amazon was fantastic. Amazon was the one. The 1720 calls went from 5 to $11. Ended the day at 8. Lots of if you're an active trader, you have time to trade. Then you can scalp these things very, very nicely intraday. So, saying all that, the same thing happened with a bunch of other things that we bought, such as the SPYs and such, which were up about 30% plus from the bottom. Chipotle, well, it didn't really care. It was up nicely all through the thing. Chipotle is going higher. The stock is going a lot higher. I've been saying that since it was $250, $300, and now it's like $617, $620. It's going to go to $650, probably $700 in the next couple of months or sooner. Believe me. So, bottom line is, even if it comes down here, it is still a bull flag. Bull flags, I don't need to show the basics here, look like this. They look like this. They can look like this. Okay, so that's it. So this is a high-level bull flag consolidation channel. Just giving you the bigger picture. So far, so good. Futures are down about 2 right now, so we're probably down here. It's really no biggie. Now, a couple of broad things to keep in mind this week. aside from the news that's going to be flowing out of the U.S.-China trade talks that are ongoing, that are constructive. We've been hearing some really good things coming out. President Trump has been pushing that in a very positive way. After all, he's the big hammer on it, right? One bad tweet about China, markets are going to be down like 300 points. But he's been talking some good stuff. She's happy with the way things are going. That's a plus. The Chinese media has reported that talks are going constructively. That's a big thing. South China Morning Post. You guys can access it on the internet. You can, I know I have it tagged. They report directly from their end. They seem to be constructive. What more do you want, right? So that's good. That's the reason why the market bumped up nicely in the morning, and then we had that sharp reversal. Now, some people have said, why did we sell off like that? Well, the simple reason why we sold off like that right after like 10 o'clock, I believe, right, is because we hit that big wall. Okay, it's really as simple as that. There were sell programs there, automated sell programs, big, at that big resistance at the 2816 level, which I'd shown from weeks ago, if not months ago, that this would be the first pattern completion. So obviously those went automatically started selling. There was no bad news today, right? So there was all good news, and so it went up. So right there, the sell programs hit at the resistance level, and automated selling came in. Stops got triggered, meaning like, the retail traders have it, institutions have it, they have stops. Okay, below that, automatically they get sold. So that just propagated the move. So once that selling got vicious, it reached nice technical levels, which I showed repeatedly during the day, which we're going to look at again to refresh your memory. And again, I repeat, all of you, if you're even half serious about making money, even if you're half serious about making money, talk about not about full serious. I don't want to hear about like, oh, I'm really serious. I know I can do it. Well, if you want to do it, you got to focus. And one of the things you can focus on is if you're busy during the day, then go through the Twitter feed. The whole visual representation of the market is right there on the Twitter feed from 8 o'clock onwards, 8 o'clock in the morning. See, you can't ask for anything more. So I walk people through it, where we drop, where we move to. That's exactly what we did. We're going to go through those charts in a few minutes. So saying all that, this is where we are. And this eased back a little bit. That's your slow stochastics. The McClellan oscillator is pulled back a little bit and this is the daily chart you're looking at. So you're not looking at the 1 hour chart, 15-minute intraday chart and things like that. It's not short term. This is more of a longer term picture. And we're reaching those levels here. And just focus here for a minute. Every time that we sold off on this big run, this type of sell-off, you buy with hands down. I've said that always. I'm saying it again. We're not even close to it yet. If we fall all the way down and drop 1,000 points, we're going to be down here. In that case, you got, some of you will be so bunkerized and diaperized that I don't even know. You probably won't even touch anything. But those are the times those are like the ultimate perfect moments. And it's repeatedly shown the same way. So these type of short, quick sell-offs that we get, like this, like we got today, they generally stop at around the 50 to 60 RSI level on the stochastics. You don't need to be, you don't need to even look at the numbers. Just look at my line. See this line here? That's a support zone. So at that level, if it breaks below the 60 level, for example, and this line crosses below, starts to fall, that means we have further downside on the daily. All right. So generally speaking, this is going to be watched very, very closely tomorrow, and the day after, whether or not we can hold this 60 level, which every single time, look at the 60 level, sell off, close to it, sell off. These are sell off candles, right? If somebody doesn't understand what a red candle means, then I really can't help them. All right, just letting you guys know. So saying all that, look at this. We came down here. All right. So bottom line is this is every single time in between this large primary uptrend, which is still a primary uptrend, you generally tend to stop at around the 50 to 60 level on the RSI, on the stochastics. That's a very valuable piece of information, guys. All right. And you don't need to even look at the numbers. All you have to know is how to just look at the chart. Open your eyes and just look at it. Look at it on a big screen or a small screen. I don't know. So that's it. So far, technically speaking, nothing changed. Can something change? We can wake up tomorrow morning. The market is going to be down 500. Sure, it can. That's completely out of my control. That's control of anybody. That's called a black swan event. Okay? We don't deal with unquantifiable events. We deal with quantifiable events. That's life. We deal with the probabilities of what can happen, where we can come down to, where we can rise. Is the primary trend still higher? Is it going to go lower? That's what we deal with. And in between, do we deal with individual stocks that have some special situations or move with the market up or down? Boeing was a big pressure on the market today. It was down 8 points. Technically, Boeing's chart, which I did not post today, I'll post tomorrow, was just one large candle. It was a bit similar to the S&P chart because the Boeing, it follows the S&P 500 very, very closely, as you all know. And Boeing is a big component of the Dow Jones Industrial Average too. So that pressured the market, obviously. So saying all that, technically nothing changed. This is where we are within this band. If we break below this level here, there should be some pressure to come down and retest this zone here. And of course, I'll be alerting people to buy SPY puts and go from there. So that's it. Let's move on from the S&P to what happened today. So what happened today? This is the 5-minute intraday chart. This is 7 in the morning, 8 in the morning right here. So we bump up. We hit that 28.17, 28. This is on the E-minis on the futures level. And the market opens at 9:30. This is 9:30. By 10 o'clock, right here, 9:45. It only gives 15 minutes to sell some. Sold some very nice stuff. Google just went ballistic. We had the 1160 calls. If people remember, they closed at around $5.90 on Friday. They opened up at 7:20. They ran to $14. Okay, it's on the Twitter feed too. I didn't catch the exact top, but I was within that range of, up there between 10 and 12. So sweet trade. And then bought it. Then we got caught in that downdraft, and then I lowered my cost down to 5, and they shot up like crazy. So now I'm on break even. So took profits first, and the second trade break even. So basically 2 winning trades, despite the fact that the market is down to 06. And Google was one of the strong ones. They didn't jump back 4.5. Amazon was absolutely ballistic. The 1720 calls, which I showed to you guys repeatedly last week, they went from $3.70 to $13.94. Okay, so let's call it 14 divided by 4. Just rounding off the number, you were up 250% on Amazon. Amazon was up $23 at the close, and at the highs was up $32. Apple also opened up very strong. All the fangs, most of the big techs were doing really well. Alibaba, I haven't traded it lately. Feel like slapping myself for that because that stock's just taken off like a rocket, thanks to China, because Chinese markets are going nuts. All right, so that's really what it is. And Chinese markets are going to go higher. We have just as a reminder, we had a bunch of earnings placed today. Aside from CRM, which is down about 2.5% or $10. The ones which are going through the roof after hours. Huya, that's the Chinese gaming. What do you call? It's, how do I explain it? It's like a social platform for gaming. Huya's up right now about 9%, $2 and change. I think I mentioned C-Trip. C-Trip is up 9%. YY, another Chinese company, also mentioned on the earnings trade, is up 6%, up more than $4. They're going to be sweet winners on those cheap calls, but at this afternoon as recommended. So good start to the day to start with, regardless of where the market opens up. That's how we do earnings. All right. Well, I need to explain that to you guys. So saying all that, what we have here is what happened today. So immediately this big sell program came in. Like I explained before, there was obviously some very automated programs sitting there, and it just got like, whoa, So what happened here? So 1 second. That's one of my doggies getting excited listening to my candlestick patterns here. So saying all that, let me just change this color. That was the first thump. Then the markets tried to recover. It was still trying to recover. It was still trying to recover till about 10:30. Till about 10:30. So I bought the Google. I sold the Google there. Then I bought the Google down here, and then you get caught in that downdraft. So I always do staggered entries. You buy one call, maybe you buy two calls, whatever you can. You can buy half a call, right? So you can buy fractional options. You got to buy a solid number. So, and then I said, you know what? I'm just going to hold it up. I track Google on my trading charts, and the stock basically, obviously, came back up, went down, and then let's stick to the market. And then the market basically started to do this. Started to recover a little bit around 11 o'clock. Make a long story short, there was one other recovery attempt at around 12 noon. And I walked people through it, through and through, showing the VIX, showing the E-minis, showing the SPYs. It's all on my Twitter feed. I repeat again, instead of telling yourself and bullshitting to yourself, right? The B word used by President Trump over the weekend too. All right, in New Yorkers we use it all the time. So instead of bullshitting yourself that you want to focus and learn, well, let's really get down to it, kids. All right, seriously. So one tough day makes 10 great days. So that's it. So anyway, I don't want to do the Tony Robbins crap anymore. So saying all that, the key is that the market's bottom at around 1 o'clock. Now I drew this Fibonacci extension. Teach all this stuff on the ACS sessions. When you get this impulse drop, that's called an impulse waterfall. It's like a waterfall, straight down overall. Drop, you generally tend to get a reflex bounce. That's exactly why you use the Fibonacci retracements. This applies to stocks and indices or any other financial instrument. Foreign exchange traders use this a lot, FX traders. And so I drew I pulled the, I placed the Fibonacci extensions, and lo and behold, I said, it always recovers 50, almost always. It's almost a 90% accuracy rate, whether it does it in 1 day or 2 days, whether it does it in 1 hour, 2 hours, but it always does that. So you got, and this being an intraday waterfall decline, what we call an impulse sell-off, for reasons I explained earlier, you get a snapback up to the 50% level. 0.5 is 50%, right? 0.5 is 50%. So 50 fib, we call it 50 fib, and guess what happened? We shot through the 50 fib right at the close. Right at the close at 4 o'clock. Now, if you want to see how this correlates with the SPY 280s, giving you an example, at the lows was $1.31. They went to almost $2 when it hit that 50 fib. So you could have easily traded this. If you have time, you could have easily traded this or thrown some order out there to sell it. That's 70 cents. Let's say you didn't buy it at $1. I'm just giving you the whole number. 131. So it went to $2 from a low of $1.31. This is the SPY March 8th 280 calls. We're talking trading here, guys. You guys are all traders after all, right? So you follow me so far. So you're looking at a 52%. You're looking at a 52%. 1 second, 2, 1, 2, 3, 1. You're looking at a 52% move intraday, and you could get a nice chunk of that in the middle. You don't need to, no one buys exactly at the bottom. Yeah, you can, but you won't get the price because the machines are moving too fast. You're trying to, the low was $1.31 on the SPY 280 calls this week's, obviously. 280 calls. So $1.31 was the low right here. All right, that was the low. And then when it hit the 50 fib, it was approximately $2. Approximately $2. So at the high of the day, which is where the market closed at. So so you got you got yourself about 52% on the money. Not bad. Catch a nice chunk of that in the middle. You're a happy camper. That one trade could do it. All right, that's the way it's done. So at this point, we are. This is moved. The screen's moving because this is a live. This is a live screen. Obviously, it's a e-minis. So let me just do this. There you go. This is where we are right now, and so that's how it's done. So this was your intraday picture. So intraday picture was obviously solid, and now overnight, as you all have beautiful dreams, you are, and hopefully no nightmares. You are going to this is going to vacillate, probably come down here. Who knows? We might test even the bottom. I doubt it. But you know, overnight. The Globex futures are going to trade within the range. Will trade within the range of the Fibonacci 50% level, and we have traders we have members who are futures traders. They use my charts extensively, so they trade off these charts, including their own charts. So they'll be finding this extremely useful. So all kinds of stuff will be happening overnight. All right. So that's sort of the algorithmic wave function that'll happen. But it really doesn't matter because we're not trading overnight. So this is your first intraday chart. The second one is this. Let's look back at a slightly, let's scroll back a little bit, go back. As you can clearly see here, extremely volatile markets going all the way back to the 19th. It's a long time ago, guys, 19th of February. And we have had these pullbacks, which have generated big snapbacks. Mini pullbacks, big snapback. This is the ultimate guided map ever for anybody who's a swing or day trader. That's it. I can't do anything better. I show the support levels. When they break, sometimes they bounce. And if they're breaking more, you guys are adult traders after all, right? I hope no one's below 18 or 14 or 10. So you're adult traders, use your judgment. If it breaks the support levels, you're like, go, fine, buy some SPY puts in your own. A lot of traders do. And then you get this lucky waterfall decline. Oh, let me just draw this out. This also happened. So this was way back. This is, you're talking weeks ago. And this is what happened today. So somewhere along the line, some big machine, which was set to sell at around that 28.20 level, 28.16 level on the E-minis around 28.19, it automatically started selling hard, pushed out the stops for a lot of other traders, retail and institutional. That's why you got this waterfall decline. This is unusual. Unusual offers opportunities. So we got deep oversold real fast. I mean, real fast. We almost hit that rock bottom, short-term rock bottom, which has been a major support level, as you all can see, going all the way back to, sorry, the 15th, right after Valentine's Day. Look at that. So that's why you have this big fat red line. That's why you have this green line here showing you that was the reason you have that green line there is because that was the previous breakout level. I hope you guys can understand that. See this green line? This is when we broke out. We broke out like a monster back on the 15th, right at the market open, 15th of February. That's why you have this big fat green line. So automatically where you broke out from becomes your support level. Not that hard to understand. Like I said, this isn't SpaceX, all right? This is just simple stuff. So what was the breakout level before? Now is support level. That's why you have the red line. So in one single, a few hours till 1 o'clock, we almost hit that major support level, and I was showing that. But before we could do that, somewhere in that vicinity, there was a sharp reversal, and then this happened, right? And we came up here. So at this point, this is showing you the face of how the machines look at markets. Okay, this is showing you exactly the matrix, how the machines are looking at the market. They're looking at ranges, they're looking at levels, and people who trade the SPYs, And people who don't trade the SPYs, they want to have an idea like whether or not this is a sustainable bounce or not. Well, the 15-minute chart has a lot of candles because it's 15 minutes. So this is where we are. We could very well come back and retest this. That's what's moving right now. We can very well come back and retest this lower level tomorrow, create a sharp double bottom. I don't see any fundamental reason why the market should be selling off unless we have some bad tweets or news coming, or some negative vibes coming out of the US-China trade talks, or that Brexit crap that's happening in UK, which is actually some positive news because Prime Minister Theresa May, who's trying to do that modified Brexit, is actually getting support from our own party. So there was a lot of good news actually today. So this sell-off today was pure technical. It had nothing to do with the fundamental backdrop of the news. So anyway, so this is where we are. Remember, the North Korea deal not signed has really very little to no impact on the market. That's all political garbage. One party attacking another. He didn't do it. He talked it out. Like basically two fat guys got together. Donald is fat, right? Exactly. So I don't care how much somebody loves him. I mean, you can't call him, look, he's so svelte and slim. He's not. He's a fat guy. Other guy is fatter. North Korean guy, Kim Il Dong or whatever his name is, Kim Il Jung. So basically, they, in my opinion, President Trump did the right thing. He didn't sign the deal, but he shouldn't have played it up so much. But on the market front, it has absolutely no bearing. Why? Because markets don't give a crap about countries which starve their own people and have no money. Period. All right. We care about what happens in China. We care about what happens in England. We care what happens in Germany. We care what happens in Dubai. Money talks and shit walks, right? That's just the way it goes. So North Korea has no bearing on the market. Just you gotta remember that. Doesn't matter what the media plays it out to be. So saying all that, this is where we are. So from a volatility standpoint, the way I'm looking at it, blink your eye, you might be able to see the same thing. This is what's going on. And this is all happening within these ranges. We broke out of the range, very sharp. This was Friday's close. Bang, we opened up here. Sold a bunch of stuff there. SPY calls, Google's, Amazon, things like that. And then this happened. So bottom line is, I am looking at it as a complex W. Really, that's what it is. Now, many of you know what a W pattern is. A W pattern is basically something like that. In life, everything is very smooth. I mean, in theory, everything is like, oh, it should just come down, do an exact double bottom, go up. No, it doesn't work like that. Okay. In the world of trading, you can still see the pattern, but there's going to be a lot of zigzags. That's called volatility. So for people who are new, get used to it. If you don't want to get used to it, please cease being a trader. And seriously, just don't be a trader or an investor for that matter. Because if you don't understand the basic aspects of volatility and you can't handle short-term losses, you'll never make the big-time wins like we do more often than not. So this is what I'm looking at here. It's a complex W in between lots of volatility, obviously, and we should be able to go back and at least retest that level and see whether or not we can break that wall. So that's your short-term view. Next. The next is a 1-hour chart. The 1-hour chart has less number of candles. Why? Because there are 4 15-minute intervals in 1 hour, right? It's not rocket science. You learned that in first grade. So basically what that means is there's going to be, each of these are more smooth. They don't have, the 15-minute candles will be segmented in 4 candles. This is just 1 candle. You can see what's going on here. So this is your 1-hour chart. We have a very, this is the way I'm looking at it. You guys should too. This is where we broke out of back on the 15th, right after Valentine's Day. And this was the big breakout level right there. You can see that. That's also systematic machine buying, just the way this was systematic machine selling. You can tell that by looking at the candles. If you look at these charts long enough, you can know when it's just a systematic sell program coming in, and you can't do anything about it. You either get out or you buy lower and lower your cost, and on the reflex bounce make money. So the 2 ways you can do it. on the primary trend being up that I showed you on the daily chart, I tend to do setups which I can buy them cheaper to a reasonable degree, and then I know the reflex bounce is coming, whether it's going to be 24 hours or 48 hours, it is coming, and so I want to be set up for that. So that's just the way it is. So saying all that, this is where we are right now, and this is where we got to. When we look at this megaphone pattern, it's like I said, I still think that we get up to this level here at 2846, which is quite a few hundred points from here, and it should happen on the heels of that positive catalyst coming out of U.S.-China trade talks. Now, if we break this zone here, as I explained before, we're going to fall to 27.28. So again, you gotta sometimes just act on your own. If I'm not putting out the SPY puts, I'm not running your book, all right? So you should buy some cheap puts and just say, okay, this level's broke, and that's why the charts are there. And you can short it. The reason I don't do it, because the markets are pretty deep oversold, and if I start to short the market here, like a bunch of idiots tried to do, I'm sure out there, they got creamed, because when we ramped up 200 points, they just lost a crap load of money. So that's the reason why it's tough for me when I don't enter at these levels to short the market down here when there is such a huge floor or support. And that's just me. That's all. Okay, next one is the same. The same thing. This is the 15-minute picture again. This is your daily picture. So the daily picture is the same as what I showed you on the S&P, except this is the derivative of the S&P, which is the daily futures chart. And you can see here that this box that I put, maybe I should put it slightly there. This one, it's still within that bull flag consolidation. If we break below 2762, then obviously that's your mid Bollinger. This is your 50-day moving average. This is your 34-day moving average. When you just quickly glance at it, you can clearly see that the uptrend is still higher. The uptrend is broken when you fall below, when you fall below 2762, 2728. So that's when it starts to look like this. It could be a consolidation, but that means the uptrend is short-term broken. But so far, it's still within the box. It's still within the box, as you can see. It's still within the box, and it touched the lower end of the box, and that's where it bounced. You can see that right there. Right there. So that's your daily chart again. This was today. Reminded me of what happened on the 21st, 22nd of, and this is called pattern recognition. Pattern recognition, nobody can teach you. Your brain can teach you. You just have to look at things hard and look for similarities. You know how kids, you show them like what's alike and what's the odd one out? Well, kids are much better at pattern recognition than adults are. So try to recognize patterns, and in this case, particular candles, and it'll give you a lot of clues on the market. Believe me, it will. So when you look at this, and I repeated this a few times on my Twitter feed today, reminding me of what happened here. All of you, well, some of you were still doing the same thing, freaking out, not buying, and this was back on the 21st. What happened? It lasted one day, second day it was down a little bit, and then the market just took off. Do I think that'll kind of happen again? Yeah, I think it's going to happen again. That's my opinion. Unless we break below those levels that I showed you on the first part of the webinar. So that's your big picture on the market, guys. That's your big picture on the market. Now, let's go back to talking about stocks, all right? There's a lot of stocks in the market. And not everything goes down or up the same way, right? Exactly. We have baskets of these biotech stocks, the biomarines, the Array Pharmaceutical, which was up nicely today, Amarin, which was up a lot on Friday, and today just gave back 3%. It was up like 12, 13% on Friday. Tandem Computer was up a lot. I'm sorry, not Tandem Computer. That's a very old computer company, by the way. Tandem Diabetic was up a lot. Today gave back a little bit. I scaled in and bought. It was up nicely actually the first part of the morning, and then it pulled back, so I bought a little bit more. So these things are biotech sings its own tune, and we had a big buyout today. I just had a few shares. Wanted to slap myself. Should have a lot more. That was NIT. Did anyone own NIT? I told people to buy it last week as one of the takeover plays. And that is Night Star Therapeutics. The answer is obviously no. Answer is obviously no. Because if any of you did, you'd be like, yeah, I did. Okay? Fine. Doesn't matter. But point is, Night Star Therapeutics was mentioned last week at around the range. I can't remember the date, but if you can look it up. It was in that $16 range. The stock today hit 25, up 66%, got bought out. When biotechs get bought out, they just get bought out. We have caught a bunch, not a lot, bunch of these killer buyouts. But if you're not in it, what are you gonna do? What are you gonna do? I wish I had more shares. I had too little, but hey, it was still a beautiful win. Wake up in the morning, boom! It's up 66%. What more could he ask for? So that's going to happen with a bunch of mine, in my opinion. I'm just waiting to see which one goes first. Whether it's Array Pharmaceutical, whether it's Amarin, whether it's Bluebird Bio, whether it's a thing, you can always buy one call and just sit there and keep on rolling them out as long. These are not really chart plays. They're just waiting for the takeover. All right. So if you're a little bit smart, then you want to do something a little bit smarter than whatever you're doing. So Knight was a perfect example. The stock basically right there, boom, was recommended last week at around that 16 level and didn't have options. I even put that down when I said common. So even if you had 10 shares, you just made yourself some nice money. All right, boom. That's how it works. It's like earnings plays, right? Options go up 300-400%. Well, in this case, 66% on a stock. Unfortunately, there were no options. If there were options, then $2 calls, you'd have sold at 60 and you would have made some serious coin and felt like you were a king. Unfortunately, there were no options. So, the same analyst, very smart guy, who I didn't know what Nightstar was. I heard it, checked it out. I said, fine. I recommended the common last week. Mentioned Biomarine, mentioned Sarepta, and he said Biomarine. I said, love it. That's great because we have it. Those are cheap calls. They went from 40 cents to $1, pulled back to about 40 cents. Don't tell me you can't buy those. I'm not even going to bother asking if you guys have it or not. Okay. So this was another one that happened, today, and it was just fantastic. So let's look at stocks here. Stocks wise, so here I'm going to bring in the Twitter feed right there. So, this is another representation of the market, which I think beautifully crafted. Honestly, some charts of mine I really like a lot. This is one of them. I put the box there. You can see we're within the box. This is where we went. This was the same thing that happened back on the 21st. Market shot up after that. It's a pretty good shot that we hit the top again. Maybe pull back right after that. Maybe we don't. Just look with your eyes, all right? Look with your eyes. This is this amazing overall chart, which I show every day, obviously, many times, is developed on, constructed by me using Quad, QUODD. I always push Quad. I've been using them, subscribing to them as a platform for my charting and my quotes and stuff. I like the format. It's in a table format for years now. Anyone interested, let me know. And it's just fantastic. Slow stochastics are oversold. They're starting to cross over. That's a plus. So it's really as easy as that. So that's your trading range. Your trading range is 27.65 and 28.20. So 27.65 and 28.20 is 55 points times 7. So we're basically in a 385. We're in a roughly around 350 or 380 Dow Jones plus minus. We are within the box. So when the world freaks you out and you turn on the TV and you look at some stuff like, oh my God, this is the end of the world, just to calm yourself down a little bit, or maybe come back to a little reality, or you want to be a little bit smarter than the average retail emotional trader out there, the lemmings, just look at these charts. Technically, nothing changed. Nothing. So what's the other one? The VIX. I mean, I love this. Look at this slam down. So here was your big resistance level at 1730. This is the compressed 1 hour version, obviously. This was the next level. I even put arrows there so that you guys can, some of you who are not really tuned into really focusing, because most retail traders, in my opinion, are completely unfocused. The only thing they focus on are their losses. That's why they never win. The bottom line is that I put the arrows there to show you that those are major resistance. Those were the big sell programs came in. There was one. I even marked them. You know how much time it takes me to put these things together? Trust me, I can just put the naked chart there with these lines without putting these markers and arrows. I would be less tired at the end of the day, guys. All right? But I do this to help you all. I want you to understand it. I don't need like, oh, you're so great, you're a great guy, you need to do this. I don't give a crap if I'm a great guy or not. In fact, I'm not a very great guy. All right? But I'm a great guy when it comes to helping others. I want you to start helping yourself, all of you, so that whatever I'm trying to help you makes more difference to your life and trading. That's what I want you guys to do. All right, guys and girls, to do. Seriously. So start focusing. So in order for you to focus more, kindergarten style, I actually put markers. So you can see here, that's a big slam down. That's good. Now, that doesn't mean that this can't bump up. But when I saw this slam down happening, that's when the market, as you know, VIX comes down, market goes higher. It's a contrarian signal, the volatility index. I started to see this candle develop. I'm like, this market is definitely going to jump hard. And it certainly did jump hard. So this is the smartest way on a directional basis. When I'm putting this up or you're looking at your own side, ladies and gentlemen, is you can tell whether or not we're going to have that reversal bounce continue or whether we're going to fall further. If the VIX green started to break out over 17, I don't care what anyone, what I think or not think. And I really don't give my opinions too much thought. I give my technical opinions based on my charts a lot of weight. My own opinions and stuff, honestly, I really don't give that much credence. Because what I think will happen within the next 15 minutes, half an hour, means nothing. It's my charts, what they're telling me, is what gives me the confidence of knowing whether or not I should tell people to buy or whether to lower the cost or whatever. So always keep that in mind. Your own opinions and stuff, it's garbage. My own opinions about whether or not, I think of something, garbage. Yes, I have more knowledge about the markets. I analyze and process information faster. Yes, I know I have all those skills. Okay? And I keep on developing those skills every single day. But as an opinion, whether or not the next 15 minutes to 30 minutes, what the markets are going to do, I have no frigging clue other than looking at the VIX and then looking at my S&P charts. And then looking at my stocks and saying, okay, I'm going in. And of course, I trade the charts based on their own levels and such that I keep on showing you all. So coming back to the VIX, this was a vicious slam down. Now, it can easily bounce up a little bit, but as long as it doesn't traverse and go above 1683 and 1727, we're good to go higher. This was that huge move on the VIX when the market was down 400 points. Start to get to know the VIX. Start to study it. Again, this is not rocket science, ladies and gentlemen. I keep on repeating, okay? This is not SpaceX. This is not Elon Musk coming up with another idea to throw men to Mars, which he's probably going to do. I don't know if anyone saw the SpaceX launch and docking with the space station. It's so frigging amazing. It's not even funny. It's great. what the human mind can do. We're like nothing. We're like dumbasses, like of the highest order. Myself included, when I think of what these guys are doing. Seriously, amazing. So what I'm showing and trying to teach you guys is so easy. But we have to keep our mental strength in gear and try to read these things. Stop making trading harder than it is. Yes, you're going to have some bad days, but if you don't set up on those bad days, you will never get those fat green days. So stop thinking you're that smart, because I'm not that smart. My charts, the way I construct it, are amazingly smart. Capiche? You understand? That's what they say, the Godfather. Do you understand? Okay, I hope you guys understand. I try to sound like Marlon Brando there, But anyway, so that's it. Now, VIX is a derivative. It tends to move in sharp candles back and forth, but it gives us a good indication whether or not the market will have a follow through, or whether or not we are going to completely collapse, because if the VIX completely starts to go bonkers, and then I show the daily charts, which gives you a much bigger picture. If the VIX started to go all the way, I'm like, oh, in that case, I'd be definitely putting in some SPY puts. But it didn't. It got slammed down, just the way it did back on the 15th, right after Valentine's Day, just where the market's at bottom. I just showed you earlier. Just the way it did on the 21st. I'm sorry. On the 21st, got slammed down. So these are very technical charts that I put out. I even draw the lines and everything and the markers so you kids can focus. Remember, I know you guys, somebody's going to get pissed at me and say, shut up, Frank, stop saying that. But guys and girls, this is not SpaceX technology. This is easy stuff as long as you just look at it. How about that? All right. Multiple stock charts put in place. Pizza did fine today. That stock is a swing play. I still think it gets some sort of merchant acquisition, stuck between 42 and 45 bucks. Those little lotto calls keep on moving back and forth. I just keep on buying them. And buy time. Always have a 2 weeks to a month, because when something happens, because the stock is so pretty cheap. I'm talking about Pizza Hut. It's just going to happen. Boom, just like that. It'll be 50 bucks. Those calls will be up 300-400%. And you'd be like, oh, wish I'd owned them at 30 cents. And they'll probably be trading at 4. So these are multiple charts that I put out there. Chipotle, Tillery, I keep on buying the cheap calls. Again, just to give an example of why I use quad so effectively, trying to where's Google? So here's a Google chart, right? This is why it's so easy for me to trade, and this is something really helpful to all of you, okay? Look at how easy it is to read this chart. Up and down. These candles, these systematic, this is Google. We bought Google here, we bought Google around here, we bought Google around here, we bought Google on Friday. Bang! I said the stock could go to 1160. Think I just made that number up? No, I looked at my charts and the way I constructed it. And guess what it did? It went to 1165. I said 1160 to 65. That's exactly where it hit. You can't get any better than this. So I sold my first batch here. Boom, I'm out. I even put that out there. Then it started to pull back. I thought the stock would there's a gap fill here. See, there's a gap fill right there. So I bought the Google calls here. Boom, got caught. So those Google calls that I bought at 7 or something, and I sold them all the way in that $10 to $12 range. This was Friday. Then I rebought them here based on the lower channel. Remember, this is 1, channel 2, 3. And by the end of the day, the stock ended at 1152, right here. So that's why I use these charts. They are extremely easy to trade. In the meantime, this is deep oversold. The stochastics are deep oversold. Every time it gets deep oversold, I'm going to say it again. Somebody slap me. This ain't SpaceX technology, kids. Every time it gets deep oversold, it bounces. this is going to, unless something changes dramatically in the market, that's a different story. You're going to get, you already got a bounce. The stock went as low as 1138. That's when the 1160 calls were at $4. They ended at 8. They went above 8. It went to 1138, closed the day at 1153. Right here. So when I'm trading off this thing, it's very easy for me to read this. Now, is it easy for me to time every 15 minutes? No. Do I buy something at $7 all of a sudden I see it slip to 6? Yes. Do I freak out like a lot of you? No. Because I can see where the big bottom is. The big bottom is 1134, except during the day it did this. So at this point it's going to hit this 1155 level where it closed at almost. That is a little bit of a resistance. I still think if the market cooperates, we're going to see Google all the way to 1170. Now somebody might say, well, why did it sell off like that? Well, I explained all that. There was no reason for Google to sell off like that. There was no reason for the market to sell off like that. That's because big, fat, technical automated programs were sitting, and when they start selling baskets of ETFs, QQQs, SPYs, these are all components of that basket. So they'll all get sold. It doesn't have to be a fundamental reason. And it wasn't just Google that got sold. So, so these charts are, like I said, anyone can read them. And you can see the stock, despite its full-scale drawdown, and then it looked like this by the end of the day. That channels are intact. Upper end of the channel is 1160. Next channel is somewhere here around 1175. So I'm just kind of walking you guys through. I'm sure most of you know, but some newer members might not know. Amazon. All right, I'd drawn Amazon, and I kept them pushing the 1720 calls. You all know that. Look what Amazon did. It broke out of this very wide channel. Went ballistic, hit the 1709 mark, which is the upper resistance according to Quad, according to this platform. Immediate fat sell-off thanks to those automated programs. Can't get any better than this. Hit the upper end of the channel again at around 1675 intraday, 1674.36, and bounced like a you-know-what. I'm not even going to say it. And closed at close to 1700, 1695. Closed here. Huge movers. That's what vol programs do. But Amazon was green all the way through. But what I'm trying to impress upon you all is that I already produced the quad charts. Worked very hard to show this to you guys as much as possible. It's not possible for me to show you, 20 different charts updated every 15 minutes. Sorry, just can't be done. You can see how beautifully it hit that level here and then went and closed somewhere in this range at the upper Bollinger. Very, very accurate. So anyway, so that's a good slice of everything. I've covered quite a few things here. I'll be more than happy to answer any questions and then wrap up this webinar. So feel free to ask me. I have my platforms right in front of me. I can pull up any chart anyone wants to look at. So please don't waste your time or mine. Feel free to ask me. Guess none of you.
Hey, Frank.
Yes, go ahead.
Hey, Frank, can we look at a chart for GWPH?
Yeah, that's a great company, man. I haven't traded it lately.
Yeah, I've been trading them quite frequently.
Nice. It's a very powerful chart. It's on the upper end of the scale right now. I used to trade it like last year. This chart, by the
way.
No, I know it's you. What the stock that Drew just mentioned, the terrific stock, GWPH, GW Pharmaceutical, has the only, and many of you remember because we used to trade this. We also played this on earnings a couple of times in the past 2 years. Has the only epilepsy drug for children that is made out of cannabinoid medicine. So these guys are serious, a British company, serious company. So let's look at the weekly. The weekly chart is hitting that upper end of the mark here, Drew. So this is definitely very positive. This is considered to be a cup and handle, or an inverse head and shoulder, head, left shoulder, right shoulder. So worst case scenario, if the stock drops, it drops to 140. Not that anyone wants it if they're long, but if it's hit here, expect to see a minor pullback, minor. And I'm going to put this up on my list tomorrow. Thanks for bringing this up. Minor pullback. I expect this stock to hit the 200 level. I expect to see the stock at that 200 level. This is very powerful. This is telling us there's a lot of juice in the stock. The slow stochastics are up and moving sideways. This is very positive. Are all the gaps on these charts a function of news? No. No. The gaps on the charts are a function of technical moves on the E-minis and the S&P 500s. The news is simply a secondary catalyst. That was Mike's question. Are all the gaps on these charts a function of news? No. They're a function of technicals which use the news as an excuse to move along those levels. And they're also a function of open interest or point of maximum pain, which way the institutional traders are betting. So it's also a function of that. So that's a good question. But the news is just a component of those gaps. They are not a direct reason, primary reason for different gaps that happen. So Drew, yeah, the good chart. I would look to see how the pullback is. Options on these things are not as correlated. Am I right in saying that? Meaning that they don't move dollar to dollar because it's more of a thinly traded market. Am I right in saying that, Drew?
Typically, it moves anywhere from about $4 to $5 a day, whether it be up or down.
What, the stock or the option?
The stock, not the option.
Yeah. So $4 or $5 exactly. So basically, from an option standpoint, remember, for this type of stock, for you to make any real money, you got to put in sides. So that 4 to 5, you got to buy it's expensive stock. It's $176 stock. So 100 shares is $17,000, right? So.
Right.
Yeah, so we tend to trade these in options. And the option for GWPH, from my past memory, serves me right, are not as elastic, means that they don't move as much dollar to dollar like some of those other, like the Amazons or the Googles or the Facebooks do, or Apple, which have a high delta and gamma. That simply means that they move very closely with the price. You understand what I'm saying? So that's one of the reasons why GWPH, if somebody's looking to make some serious money over the day trading or swing trading, they would have to be patient, like many other biotech stocks, because they don't move. That $4 to $5 doesn't really make you any real money on the options. Do you understand what I said?
And that's exactly why I asked that question. That's the exact reason. Because when I take a look at the spread on it, the spread is typically wide.
The spread is
on that option.
Okay, so here's a good point that Drew brought out. You'll see spread very wide on a lot of biotech stocks. Okay, and the market. Oh, keep in mind that the people who are the most dangerous people in the financial markets are the options makers. I'm telling you right now, they're a bunch of complete scumbags. Because they will, especially on its stock that is not which doesn't have heavily traded options, not the Apples and stuff of the world, where the spreads are very thin and tight, and you can get in, you know what you're getting into. And these ones, they could be $4 wide. It could be like 4 and 9, and you're like, what the hell am I buying it? So you got to play in the middle, and then you don't know what they're doing. They'll give it to you at maybe 7, and then suddenly they'll drop the bid down to 5. And you all of a sudden, right after you buy the option, you're down $1. So that's because they're thinly traded options, and biotech stocks which are not heavily traded intraday from an option standpoint, like GWPH, like some of the others that we trade, have that problem. The spreads are so wide, you get some really crappy fills on your prices. And I think you know what I'm talking about.
I do.
Exactly. But we got to work in within, because if the stock's going to go, it's going to go. So you want to be in it. So people have asked me, so how do you get the price? Well, I just test to see, I'll put one out there and see where they bite. And right after they bite, I know for a fact they're going to drop the price a little bit. It's just nothing you can do. But if the stock's in the right trajectory and direction, in that case, based on my charts, I will hold them. This Biomarine, for example, we have done very well on it. This stock is a monster. So here it is, your head, here's your left shoulder, here's your right shoulder. It fell and then it rose tremendously just in the past 2 weeks. And we've been playing this. This is a beautiful chart with the neckline here at 100, and I expect the stock goes to 100. You can see that. This is your head. This is your left shoulder, right? This is your left shoulder. This is the right shoulder. And on top of that, this could be a buyout, which I really pray it is. It's a major cancer therapy drug, CAR T. Great job they do. It's European, I believe. We've traded this before. And you can see here clearly that from a technical standpoint, the stock wants to go. And even if it goes to 95, 97, this was today. This was this. Didn't change anything. So this is your big head and shoulder. Look, measuring up to 100. This is your small head and shoulder. Head, left shoulder, right shoulder. Held it nicely. I was watching it. Neckline, somewhere between 98 to 100. These options move very nicely, and they're cheap. So I like it. So, okay. Any other quick questions? Thanks for your questions, Drew. And I also, this last 2 weekends were really busy. I need to connect with you to restart the ACS. So I'll be in touch with you. All right. So, any other questions? Yes, Drew. What were you saying, sir?
Oh no, I just said got it. I was responding to you.
Oh, no problem. Okay. All right. So we're going to sign off. We covered a whole bunch of good stuff here. Markets overall are fine. I will promise you one thing. If I do see any real danger signs on my charts, and I get that feel, just the gut feel that I have in the markets, from doing this for a long time, that something is about to go really wrong, rest assured I will never, as I've never done before, just sit aside and not mention that and say, oh, no, the market's going to go higher. I don't do that. Just keep in mind that when volatility increases, that this is, by the way, I have to mention this to stop myself on that volatility increases front. This is a chart of Amazon, okay? This small move on Amazon today was $23. How do you like that? Right? This is a daily chart. I was pushing Amazon all the way from 1600. If you look at this chart here, upper end of the level is 1730. Why do you think I was buying the 1720 calls? Because I was looking at this thing here, and I said, this is a trading band. And this trading band looks like it wants to go to the upper end of the trading band, which is 1736. Well, guess what? The stock today went to 1710, and I have a pretty good feeling if the market cooperates based on the candles, not that hard to imagine, it'll go to 1736. And those are nice amounts of money. And once it hits that, it's going to be, it's probably going to pull back because it's only 30 points from here. But you can see this is also, from a longer term perspective, a large head and shoulder. Inverse head and shoulder. Head, left shoulder, right shoulder. Here's your neckline. The neckline measures between 1740 and $1,800. That's where it hits a real wall. So that's the way technical traders trade. You look at the candles, you look to see how things are, you look to see what the internals are doing, and you make your decision and you go in there. You buy some time. You can buy the Amazon calls are obviously pretty expensive, so you can't buy, if you buy them a month out, it's going to cost you an arm and a leg, but that's fine. But you can see here clearly that based on this candle structure, 1736 is the next stop on Amazon, given the right conditions, which could be as quickly as tomorrow, if not this week. Now, if the stock breaks below this level, you can rest assured that it will hit 1600 level, at which case you want to be a committed buyer. So it is trading in the range of it's really trading within the range of 1730 and 1600. So that's the way we look at things on a mechanical basis. So saying my last thought that I am extra I shouldn't say cautious. I'm always cautious, but I'm monitoring things very closely to see whether or not today's impulse sell-off was a one-off or whether or not this is the start of a bigger move down, in which case we're going to flip sides and go very nicely short. But like I said, the primary trend, as I showed earlier, is still higher, and I don't want to basically go way too short and then the market does this and then goes here and then you're burnt. You're burnt like cinder. If you're short in the wrong direction, you're burnt. You know how it goes. So this primary trend has to break in order for us to be more committed on the short side. On that note, have a great evening, ladies and gentlemen. Thanks for coming in today. Let's have a great week. Let's always keep a very close eye on these charts and your own charts too. Let's not get too swayed by just watching the price and the price movements, because they never tell you exactly when the market's going to turn. And let's not get too emotional. Remember, we're playing with real money here. So emotions are always in play. Let's get them a little bit more under control, which I try to do myself every day, so that we don't do anything stupid. On that note, God bless you all. Thank you for listening.